Packaging and palm oil player Yee Lee Corp will be taken private by its founder and executive chairman Dato' Lim Aheng alias Lim Kok Cheong, as well as other shareholders. It announced to Bursa Malaysia that Lim and his wife, Datin Chua Short Tim alias Chua Siok Hun, the couple's son and Group MD Lim Ee Yang, and holding company Langit Makmur will purchase the remaining 79.69 million shares or 41.59% they do not hold in the group for RM2.33 per share. This represents a premium of 39 cents or 20.1% from the counter's last traded price of RM1.94. Currently, Lim, Chua and Ee Yang control 111.91 million shares or 58.41% in Yee Lee, while Langit Makmur does not hold any Yee Lee shares. Following its takeover, Yee Lee will cease to be listed on the bourse if the group does not meet Bursa's minimum 25% public shareholding spread. The High Court will decide on Monday, April 29, if it will amend or quash any of the charges of criminal breach of trust, money laundering and abuse of power against Dato' Sri Najib Razak. Dato' Muhammad Yusof Zainal Abidin, who is Najib's lawyer, claimed that the charges against his client are defective and constitute an abuse of the court process. Meanwhile, defense attorney Dato' Kamarul Hisham Kamaruddin argued that corruption charges could not be tried concurrently with CBT. On July 4, 2018, Najib was charged for the first time for abuse of power and 3 counts of CBT linked to the 1MDB scandal. On August 8, he was taken to court for the second time and was charged with 3 counts of money laundering involving 42 million ringgit. Telco player Maxis saw its net profit falling 22% to 409 million ringgit for the first quarter ended March 31, 2019. Which it blamed lower average revenue per user and the termination of network sharing agreement. It pointed out on a quarter-on-quarter basis, however, its earnings actually saw an improvement of 56%. Maxis explained that the lower ARPU, which fell from 59 ringgit to 56 ringgit, was due to the decline in mobile termination rates-based revenue. Meanwhile, revenue was flat at 2.23 billion ringgit. Commenting on the group's latest results, CEO Designate Gerhan Ut described it as stable and a quick recovery from the fourth quarter of FY18, as customer take-up of the group's converged, fibre and enterprise services has been strong. Going forward, Maxis said it will continue to focus on maintaining its position as Malaysia's leading converged communications and digital services company by leveraging on its network and expanding its presence in the fixed broadband market. Westports Holdings' net profit grew 13% year-on-year to 139.9 million ringgit for the first quarter ended March 31, 2019. The port operator explained in its BOS filing that the higher net profit was thanks to a container tariff hike which took effect from March 1st. Meanwhile, revenue improved 7.8% year-on-year to 415.19 million ringgit, mainly due to a double-digit growth in container volume as well as a container tariff hike. In a separate statement, Group Managing Director Dato' Ruben Imen Nanalingam said Westports enjoyed favourable volume recovery momentum since transitioning to a new baseline and transshipment volume in 2018. He added that the continued growth of the AirAsia segment further pushed the group's container volume recovery, achieving a 12% improvement in overall volume growth. For 2019, Westports said it expects to achieve higher overall container throughput, contributed by both the gateway and transshipment segments. AirAsia says it carried 12.55 million passengers across its Malaysia, Indonesia and the Philippines markets in the first quarter of 2019, an increase of some 18% a year ago. The low-cost carrier attributed the improvement to a 17% year-on-year increase in capacity for the first quarter of 2019 as passenger load factor improved to 88%, up 1 percentage point from the first quarter of 2018. In a statement today, AirAsia said its capacity expansion measured by available seat kilometers was 11% higher year-on-year as new routes and frequencies were added for both domestic and international routes. Meanwhile, AirAsia's subsidiary Thai AirAsia carried 4% more passengers at 5.86 million, thanks to the extension of the visa on arrival fee waiver scheme for visitors from 20 countries and 1 territory. For AirAsia India, passengers grew 32% year-on-year to 1.94 million, fueled by capacity expansion at 23% year-on-year. Meanwhile, AirAsia Japan recorded an 80% growth to 94,051 passengers thanks to its first international route to Taipei in February, which saw a 79% increment year-on-year in capacity.